Hey everyone, here's a quick newsfeed for today, as all these articles are relatively short and simple. First of all, we'll go over the rejection of a flat tax experiment in Kansas, enhanced reporting requirements in the Netherlands, and lastly, some straight up tax fraud. Anyways, let's get into it. Governor Kelly vetoes reckless flat tax experiment and calls for responsible tax cuts for middle-class Kansans. Governor Laura Kelly today vetoed House Bill 2284 after receiving the legislation this afternoon. In her message, she states that she supports responsible tax cuts but refuses to sign into law a reckless flat tax rate that would do next to nothing for middle-class Kansans, and that this experiment would overwhelmingly benefit the super wealthy
I have a feeling we're not in Kansas anymore.
and put their public schools, roads, and stable economy at risk. Wait, hold on. What's a flat tax? So if you take a look at your local tax legislation, you'll probably find the tax rates. Taking a look at Trinidad and Tobago as an example, we can see two rates, 25% for people earning less than $1 million and 30% for income earned over $1 million. Looking also at the UK, we can find that the rates ramp up from 0% to 45%. A jurisdiction is free to add as many brackets as they want, according to their policy.
Are you serious? This is torture. You're torturing me and everyone else watching. Wait.
So, as you can see, these rates increase as the base of the tax, the income, increases. So each successive bracket or margin will incur a higher tax on that range of income. So what can we learn from this? Don't declare that you earn more so that they can't take more? No, not at all, bro. We're not encouraging that here. We learn that progressive rates are because they increase with the base of the tax. In an effort to achieve an equitable tax regime, those earning more are expected to pay more. This is where that whole tax the rich argument comes in. On the other hand, let's look at the proposed tax cut that Governor Kelly vetoed. Okay, 5.25% for everyone, regardless of income level. If I was making $1 million a year, I'd be paying the same rate as someone making $60,000 a year. So instead of the progressive 3 margins that they had before, that's clearly a flat tax regime. See, it does not increase or decrease relative to the size of the base of the tax. In that case, it's income earned by Kansas residents. Next up, selling lots of stuff online, the tax office may be watching you. So the author reports here that the Dutch tax office is indirectly monitoring sales via second-hand websites, such as Vinted and Marketplaats, hunting for people earning more than 2,000 euros a year from those sales and 30 products. This is done through cross-referencing the tax returns of the sellers with the income reported from the websites to see if the sellers are not reporting the income earned from those sales. They say that the office is targeting people officially trading and basically running a sizable business on these sites, not 1 or 2 people selling something here or there. These efforts were brought about by the EU Directive on Administrative Cooperation for Digital Platforms, or DAC 7. Essentially, this requires platforms that offer a virtual marketplace like Vinted and Marketplaats to provide information on sellers, such as their income, to the resident tax authority. That way, the tax authority is able to reconcile the sales figures and personal income tax returns in order to figure out whether or not these career sellers are not declaring their income earned from their trading. So don't get any funny ideas. Talking about tax crimes, let's talk about the next story. Dubai intercepts key suspect in $43 million global tax fraud scheme. Now, I only saw one other mention of this arrest from Al Arabiya, but there's not really much information to go off who did it. But what's really important for our understanding and this channel is how they did it. It says here that they committed the fraud through submitting false value-added tax declarations, or VAT, through e-commerce platforms. I mean, just reading that sentence, we can see why regulations from the previous story were even cooked up. So VAT functions at all points in the supply chain as a markup to represent the value added by those stages in the production or service processes. For a company in the middle of the supply chain, there's output VAT and input VAT. The output VAT is the VAT collected when the company makes a sale, and the input VAT is paid when the company makes a purchase. Usually, companies in the VAT chain collect more output VAT than they pay input VAT. That's because it acts as a markup on the sales price, which is often higher than the purchase price of the constituent materials. When this occurs, the company files its return with a VAT payment of the difference that they're owing to the authorities. But where a company has more input VAT than output VAT, they can file for a refund of the difference, so that the authorities actually owe them for basically overpaying VAT. How these guys clocked $43.3 million is absolutely insane to me, because first of all, that's a lot of returns. And second of all, that's a lot of consistent refunds. I'm impressed by both their commitment and the government's ability to pay the refunds. Anyways, that's essentially how that fraud was enabled. They exaggerated their input VAT to consistently make it higher than their output VAT. That about wraps it up for this feed review. From this one, I'm going to be releasing one of these videos once every other Wednesday, so be sure to be on the lookout for that. As always, let me know your thoughts in the comments below. Thanks again for watching.